Hi, this is Chandrashekhar Prabhu once again. In our last post, we saw the model which has emerged as the most preferred model for self-free development when societies refuse to take loans from either financial institutions or bank and rely on their own resources by selling surplus area to their members at 30% discount, to the blood relations of the member at 20% discount, and to other relations of the member as specified by the general body at 15% discount. There are a few societies who have innovated on this model, and they have made the fourth category of cousins. If cousins of the member or the spouse of the member want to buy a flat, then they have decided that it would be 10% discount. Now, this is a model which is catching up, and there are 7 to 8 societies which have gone ahead with this model. When I explained this model last time, the response was obviously tremendous. A lot of societies came up to me and in their response suggested newer models, very innovative and newer models, wherein there is very little chance for things going wrong and the risks are reduced to a considerable extent. So let me explain to you the new models on which people have started thinking. First of all, I will tell you a model which was implemented by a cooperative housing society in Mulund more than 8 years ago. The building is complete and the people are staying in that building for over 6 years. Let us understand what that model was. A few members of the society who were engineers and who understood redevelopment, who understood civil work, who understood engineering details, got together and formed a company. The shareholders of the company were all the members. All members were entitled to equal shares in the company, and this company was run by 10 or 15 professionals staying in the same building. The company then in routine course applied to a bank, Karnataka Bank in this case, and in other case the Indian Bank. The company belonging to the cooperative society members, where all the members of the cooperative society were shareholders in the company, applied for loan as a company, as an enterprise, saying that this is the land on which so much is the FSI permissible, the potential is X, and once this FSI, the surplus area is sold, we shall generate so much revenue. It's just like a model of a factory, wherein you set up a factory, you put up a machinery, and you say, I buy this raw material and I sell this much of my product, and my turnover will be this much, my profit will be this much. From that, the bank loans will be will be settled at this price. Similarly, this company gave a business model and an entire month by month need for the money and year by year repayment of the money. The repayment would be not done by the cooperative housing society but by a company of which all the shareholders were the members of the cooperative housing society. Now, the bank lent to this company like any other business. You lend money to this company, and the company then goes ahead and undertakes the construction. The company also gives the rent, just like any developer or something, to the people. The company pays the shifting charges, everything from the expense of the company. And The moment the IOD and CC comes, the company starts accepting bookings. Firstly, it takes bookings from the existing member for the extra area under the formula which we discussed in our last post. Scheme number 1, scheme number 2, scheme number 3, scheme number 4 and so on, which we have discussed in the last post. So, and whatever is left after all these schemes is disposed of by the company to those who are eligible to take home loans. Sometimes at the market price, sometimes at a slightly discounted rate, 2%, 3%, 5%, as the case may be, depending on the kind of demand that the whole thing generates. And then when the company makes profits, after disposing of all the flats, the company gives hardship allowance. Instead of corpus, the company is shown to pay hardship allowance to its members. So most of the profits are distributed to the members as hardship allowance, and then the company keeps some amount for maintenance, which on an ongoing basis a small little trust is formed to take care of that amount, and the interest of that amount is invested, and the interest of that goes towards the maintenance of the society. Finally, the company is not left with any profits, so there is no issue of giving any tax to the income tax department and so on. This is a model which a friend of mine living in Khar found very interesting, and he further innovated on this. This friend of mine, incidentally, is a graduate from the Indian Institute of Technology, IIT Mumbai, and has held important positions in multinational companies and has since retired. And now he wants to take interest in his cooperative housing society's redevelopment and wants to educate people on the self-redevelopment model. He discussed the model threadbare with me. He said, we as the members of the cooperative housing society can register a LLP, a limited liability partnership firm, wherein all the members are shareholders, are partners in the whole firm, and the firm then undertakes to redevelop the building on behalf of all the members in the society, on behalf of the shareholders of the firm, and takes loan, a business loan like any other loan is to be given to people. So a business loan is generally taken, and the flats are sold in different ways, as is known to all of you. Instead of taking advance booking for the flat, every cooperative housing society is entitled, with the permission of the registrar, to start a scheme for fixed deposits. The fixed deposits are put in the bank. The fixed deposits are in the name of the member or the person who books the fixed deposit. So the fixed deposit don't belong to the LLP company or any other entity. The fixed deposits are in the name of the person who books the surplus area, whether member or member's relation or whatever. And the concerned fixed deposit holder permits the cooperative housing society to take a overdraft on his fixed deposit if need be, in return for his investing in fixed deposits with the cooperative housing society. When the IOD and CC comes, the general body can pass a resolution that, with view of those who have decided to trust on our society and invested in the form of fixed deposits with the society, we will give the fixed deposit holders who have invested with us the first opportunity to book flats. Hence, the booking is done, the money comes to the society, and the society does not have any problem whatsoever for its day-to-day expenses, and the liquidity that is much required in self-redevelopment is all the time there with the society. So this was the second model wherein an LLP can be registered, and that LLP takes all the members as shareholders and even partners if required. There could be some members who do not want to participate in this LLP. They could yet say that I do not want to participate in the LLP by taking shares, or they could take shares but not be partners, or decide that they would be sleeping partners, and the rest of the members can continue with this entire scheme and make it a success. Then there is another suggestion which came, that in a cooperative housing society in Bandra, which has only 16 members, amongst those 16 members are 12 young people who are children of the members who are staying in the cooperative housing societies, who are professionals in their own right. These members who are professionals in their own right, in their own building, have decided to apply for the latest loans that are available, unsecured loan in a startup, wherein they say that as a professional, I am investing in a space wherein I as a professional will practice from this space, and the space will get me X amount of money from my practice, and from the money that I will earn from this space, I will pay the bank loan. So if you have a chartered accountant, he can take a startup loan with one small room in his house, bought from the surplus area, and get about 1 crore of rupees as unsecured loan from the startup. So in this case, out of 16, a good number of people availed of these loans, and about 12 crores of loans came in for the startup, and that is more than enough to see the whole project through. So this was a very innovative thing. I had not quite thought about how the younger professionals can do the startup and earn money out of the space. While earning money out of the space, of course, the earning will start when the building will be complete. But till then, this loan for a startup will be good enough, and the paperwork and other things can be managed. And that was managed by a set of chartered accountants and lawyers who are residents of that building. So this model of Bandra has really become a different model. The LLP model we discussed the earlier model of forming a company which had built this building in Mulund with the help of nationalized bank and a private bank. And now this is the model by which the funds come in the form of unsecured loan to residents of the building who are professionals in their own right and are entitled to take unsecured loan under the new scheme of startups. Then we have the fourth model. All these models have come from societies. They had not been entirely thought about. But once you give a new idea and make the society start thinking about alternatives, new alternatives come up, and the younger generation is extremely brilliant, and they have come up with newer and newer models. One of the cooperative housing society has decided that they will register a MSME, that is micro, small and medium enterprise. So micro, small and medium enterprise, depending on the size of the cooperative society, the FSI available and the amount required for construction and the potential for sale and the kind of turnover that is possible. MSMEs are decided by the kind of turnover they can produce. So considering what turnover they are going to produce, a MSME registration was obtained by members of the cooperative housing society by making all the members shareholders in the MSME, in that enterprise. And the MSME is entitled to substantial loans wherein you give employment to people. As you know, in construction, you give substantial amount of employment to people. So it's an employment generating opportunity as well. And the government and the nationalized banks and the private banks would be well within the existing rules to permit such MSMEs building. Earlier, the cooperative housing society was not considered a borrower. Today, due to the RBI's amendment and the new circular, the cooperative housing society is already considered to be a borrower. Now, they have taken it a step further by having the cooperative society register an MSME, take a loan for the MSME, use it for construction, and also, of course, at a later stage, there would be small little houses, offices within the houses which will produce the income, and the entire cooperative housing society is unanimous in this MSME. The MSME has been registered, the loans have been sanctioned, and now they are asking their architect to make plans. Why I gave you these examples is that the self-development scheme is not exclusive, or it's not just one Chandrashekhar Prabhu giving ideas. Ideas should emerge from each one of you, from every single cooperative housing society. There are a minimum of 45,000 cooperative housing societies wanting redevelopment. There are 16,000 old and dilapidated buildings which require redevelopment. There are 3,500 government lands which have been leased out to cooperative housing societies which require redevelopment. There are 110 MADA colonies, and each colony has between 50, 100 and 200 buildings. Each one of them is a cooperative housing society and they are in need of redevelopment. All these cooperative housing societies, including the slums, wherein the slum dwellers cooperative form a proposed cooperative and apply to the government to acquire the land in the name of the cooperative housing society. They become owners of the land and then they undertake self-redevelopment by selling the surplus area, and whatever is the profit after the construction is done is shared amongst the members or remains as a corpus fund. So the entire redevelopment scenario in the city is undergoing a change. And the new, younger professionals, I met some professionals who were 26-year-old, 28-year-old, 30-year-old, and they are coming up with newer and newer models for self-redevelopment. I welcome all these models. We can fine-tune them. I can give in my inputs. You can make some suggestions which I presently do not have. For instance, the startup was something which I was taken by a surprise. But the startup is happening, the loans have been sanctioned and these loans are being utilized for the purpose of the startup, which the professional requires an office for the purpose of the startup, and he is capable of generating enough business to pay back the loans, and he would get tax exemption. The main advantage with the startups, with some kind of LLPs, with some kind of MSMEs, that you get a whole lot of tax benefits. All these benefits can be taken by the cooperative housing society. I deliberately wanted to point out all these new happenings because the tremendous response that I'm getting from people, a whole lot of architects are coming forward and offering services to these societies for self-redevelopment. Good quality contractors are coming in. Good quality project management consultants are coming in. And that is definitely going to help the people. With this is Chandrashekhar Prabhu bidding you au revoir, promising you we shall be back once again with new posts. Bye for now.